Hello everyone, welcome back to this week's Technical Insights. Last week, global stocks ended a volatile month on a high note. The PCE price index, the Fed preferred inflation gauge, rose 0.2% on a monthly basis in July and 2.5% from a year ago. The result was in line with estimates from economists and market expectations. Excluding food and energy, it rose 0.2% from the prior month. The Fed keep a close eye on this metric and it could still influence the policymaker rates decision in September. And this latest data cemented a 25 basis point cut in September as it provides more evidence for the soft landing and less evidence that the Fed is required to cut more aggressively. All three major US indices finished the last trading day of the month in positive territory. The Dow jumped 228 points or 0.55% to close at 41,563 points. The US 30 stock blue chip index touched a fresh all-time high of 41,585 points in the final minutes of the trading session and achieved another record close. The S&P 500 index advanced 56 points or 1.01% to close at 5,648 points and is now just less than 0.5% or 28 points away from the all-time high that we saw on 16th of July at 5,669 points. Tech-heavy Nasdaq Composite Index gained 197 points or 1.13% on Friday to end at 17,713 points. It is still more than 5% away from its all-time high that we saw on 11th of July. For the week, the Dow advanced 388 points or 0.94% for the month to climb nearly 1.8% in August. The S&P 500 added just 13 points last week or 0.24% to post a 2.3% gain for the month of August. The broad index notched its 4 consecutive straight winning month. A surge in consumer staples, real estate, and healthcare helped lift the broad index in August. The Nasdaq Composite Index was the only loser for the week among the 3 US indices, dropping 164 points or 0.92%, but still managed to climb a 0.7% advance in August. As we end of August, only 7 S&P 500 companies has yet to report this season, a sign that the second quarter earnings season is wrapping up. Nvidia earnings came in above expectation last Wednesday and put the S&P 500 over the top this season with a 13% earnings growth rate for the second quarter, surpassing Wall Street expectation of a 10.6% growth rate. This is the strongest earning growth since Q4 of 2021, unexpectedly passing the 11.4% growth rate we saw on Q1 2022. Revenue growth of 5.5% for the S&P 500 companies were also better than the 4.2% growth expected earlier. In Asia, Hong Kong stock rose, logging another winning week for investors, scooping up Chinese electric vehicle maker like Li Auto, XPeng, and BYD after a recent sell-off. The Hangseng Index advanced 202 points on Friday or 1.14% to a 7-week high of 17,989 points on Friday, bringing the rally this week to 2.14%. The Hang Seng Tech Index jumped 99 points or 2.87% on Friday as EV makers NIO led gainers with a 10.7% surge to Hong Kong dollars $33.60. XPeng jumped 8.3% to Hong Kong dollars $31.85, and Li Auto climbed 7.8% to Hong Kong $78.85. BYD strengthened 6% to Hong Kong dollars $241.20 after UOB Kay Hian raised its recommendation to hold from sell after earnings rose 33% last quarter. The Hang Seng Tech Index has risen 3.7% in August, snapping a 2-month losing streak, and investors turn bullish on the Fed rate cuts hope as US inflation starts to cool. Back in Singapore, our STI index finished up 38 points last Friday, or 1.13% to 3,442 points. For the trading week, we added about 55 points or 1.6%. This is the third consecutive winning week for our benchmark index, building on the 1.05% gain that we saw last week. The STI is continuing its recovery since the low we saw on the first week of August. We are now just 66 points or less than 2% away from the year-to-date high that we saw on 15th of July at 3,509 points. All 3 local banks were also up on Friday between 0.8% to 1.5%. But the biggest winner on our STI index last Friday was Sembcorp Industry, up 21 cents or 4.45% to $4.93. This may be riding on the news that it has resumed its power plant operations in Mandalay, Myanmar last week. And the group said it does not expect the plant price suspension to have a material impact on its earnings per share and the net tangible asset per share for the current financial year. So for this week's technical analysis, let's look at the leading energy and urban solution provider, Sembcorp Industry. Sembcorp Industry, or Sembcorp in short, is a leading energy and urban solution provider. Last week, Sembcorp updated that they have resumed operation in its Mandalay power plant in Myanmar after the temporary suspension on August the 12th due to nearby conflicts. The company assessed that the situation has stabilized sufficiently for its personnel to return safely. The resumption of the operation was coordinated with the electrical power generation enterprise. Sembcorp said the suspension has no material impact on its earnings per share or net tangible asset for the financial year ending 31st December. Last Friday, Sembcorp share price jumped 21 cents or 4.45% to $4.93. For the week, their share price rose about 18 cents or 3.79% for its second consecutive winning week. Looking at the chart, we can see that Sembcorp's share price is in a primary downtrend for most part of the year. The year-to-date high was seen on 20th of February at $5.87, and the year-to-date low was seen at $4.35, somewhere close to the August period. During the March period, we saw Sembcorp's share price touch a low of $4.91 on the 13th of March, and then rebounded to $5.55 on the 4th of April. The share price then tried to retest this level again on the 24th of April, but was unable to make a breakthrough, forming a double top formation, which is a very strong resistance level. Connecting the year-to-date high and the high that we saw in April, we can see that there's a downtrend resistance line forming on the chart itself. Last Friday, the rebound is now testing this downtrend resistance line already. Looking at the indicators, we can see that the MACD had a big spike last Friday, indicating that the MACD line is diverging away from the signal line. This signaled an exponential gain in the uptrend momentum from the MACD indicator. The RSI indicator also spiked up above its 14 days moving average reading of 50.9 to 64.4, indicating that the uptrend momentum is strong and likely to continue upwards towards the 70-point overbought mark. The next resistance level for Sembcorp share price will be the red color line that you see here, which is the 200 days moving average, now standing at $5.12. A break above this level could see Sembcorp retest the April double top formation at $5.55. For key support level, the 20 days and the 50 days moving average in green and blue respectively, now at $4.69 and $4.74, could provide good entry levels and support for investors looking at getting into Sembcorp to continue its ascent upwards towards the 200 days moving average at $5.12. And these are the updates that I have for you this week. If you do find this information useful, do remember to like, share, and subscribe to stay updated with the latest market movement. And I'll see you again next week in the next Technical Insights.